What they are asking, which two of the following audit procedures will test overstatement of the non-current assets? First give your answer, then I will, if right, I will go with that. If it is wrong, then I will give explanation for that.
Two and three, sir.
2 and
The second and the third one.
second and the third one. Physically inspect a sample of assets selected. Physically inspect a sample of selected from the non-current asset register. Is it right? Fine. I will go with this. Inspect a sample of assets found at the location. Inspect a sample of asset. Which asset? It is a non-current asset. It is a current asset. They are not saying. We cannot say at a location. We cannot do randomly. Okay, we cannot do randomly. We have to be very specific. Is it right? We have to be very specific. Inspect a sample of assets found at randomly. See, assets are very critical. Assets are, they are saying that the company has significant amount of non-current assets and including number of properties. Agree a sample of additions, purchase invoice, ensuring that the purchase is accurate and is recorded. Third one is not specific. Okay, third one is not specific. You eliminate the third one. You choose between 1 and 4.
Last one, sir, or something?
Inspect the condition of assets held that to determine the need for any impairment. What is the first one? Agree disposals recorded in the non-current asset register for cash to cash book and sales invoice. We are selling, we are purchasing, or we are selling here additions. Is it right? We are talking about the additions. Is it right? The first point is with respect to additions. The second point is with respect to additions only. Then there is no point of having disposals. Okay. The first one is also not. Inspect the conditions of assets held to determine. It is there anything with respect to impairment? The audit programs include that following tests to be carried out. What is the following test they are carrying out? They are carrying about the test with respect to the additions and purchase invoice, purchase date, accurate, recorded in the correct amount. Is it right? If it is related to correct amount, means definitely there will be some regarding depreciation, regarding impairment. Is it right? Impairment regarding depreciation. Is it right? If there is related to that, we can think in terms of, they are talking in terms of a correct amount. Okay, they are talking in terms of correct amount, and they are talking about the additions. Okay, at the end of the year. Is it? They say that any sample is purchased, recorded at the end of the year. Okay, at the year end. Is it? Tell me which one I can take. The first one is not with respect to addition. The third one is, we are talking in terms of in general. Is it right? Inspect the conditions of the assets held to determine the need for any impairment at the end of the closing date. Check. Read the things. The question test explanation is very important. The question test candidates understanding the purpose of specific audit procedures relating to non-current assets, with the focus being overstatement. When testing for overstatement, it is essential to work from financial statements to source documents. Means you have to go from the back to front. Okay, working from source to assessments would test the understatement. If you are going from the beginning to the end, it is an understatement. If you are going from the back source to the beginning, it is an overstatement. Candidate should also note that number of responses required. In this case, they are asking 2 correct responses from 4 options. Selecting assets from non-current asset register and inspecting them test the existence, which provide evidence regarding potential overstatement. The balance will be overstated if assets included do not exist. If you are adding in the assets, but if the asset does not exist, is it right? If the asset does not exist, then what will happen? Definitely there will be an overstatement. Assessing the last paragraph, okay, the need for impairment is a valuation. Impairment is nothing but the value of the asset will decrease over a period of time. But if the asset is impaired, if the value of the asset is decreased, impairment has not been recognized, definitely what will happen? Overstatement. Is that the asset has been, the value of the asset has been decreased, but we are not changing the value. Okay, what will happen? Definitely we are showing we are showing higher value rather than the actual value. If you are showing the higher value compared to the actual value, it means it is a overstatement. A little bit difficult question. It's not a difficult question, thinking question. Is right? It is not a difficult question, means when it has to be overstated. Overstated means we have to show the actual values. Okay, we have to show the actual values. If it is exist or not. Actual values with respect to valuation. Whenever you are talking about the overstatement, it is with respect to valuation. We should not show higher value, nor we have to show lesser value. Is it clear? Is it okay? Is it okay? Any doubt, you ask me, okay? What happened?
Done, sir.
Done, sir.
Next. Which of the are tested by the procedures for additions? For additions, what we will do? Which one we will select? Anything which you
I
are going to
think all
purchase.
of them, sir.
Huh?
All of them.
Allah Kareem. Yes, Laila.
Same, sir, all of them.
Hmm?
Same, all of them.
Usually, I'm telling you on record, usually all of them will not be there. Usually, we can do as many things as possible. Okay. Whenever we are talking in terms of additions, additions means sequence number has to be there. Sequence number means completeness. Okay, sequence number means completeness. Fine. Refer the list what is there in the non-current asset substantive procedures. Okay, refer the list. First, second, or third slide, you have the assertions table is there. In that assertion table, you have to refer this. Just by randomly, you cannot tell this. Which of the are tested procedures with respect to program? Completeness will be there, sequence number. Is it right? Next, you will have what you are talking about the in the audit assertions. Okay, Classification comes next. Okay, classification comes first is additions. Okay, in terms which of assertion, in terms of additions. When you are adding an asset, is it right? When you are adding the asset has to be a existence is there. Is it right? When you are adding the asset, existence is very important. Is that existence is very important. Next, when you are adding the asset, is it right? When you are adding the asset, the value of the asset is important. Is it right? Accuracy, specifications is very important. You are allocating, is it right? Whether it is a current asset, whether it is a non-current asset, is it right? That is also important. I will go to the scenario, okay? I will go to the scenario. It gives you something more. They are talking about the properties, straight line basis. What is the audit program is there? The audit includes the following tests to be carried out in relation to audit. Agree a sample of additions in NCR, non-current asset register, to the cash book, purchase invoice, and it has to be recorded correctly. Compare the additions with the budgets and the actuals, and any difference is there, you have to write down. Okay, you have to write down. Here, when you are talking about the things, what you have said, tell me, I will go with your answer. All 1, 2, 3, 4. Can I click that one?
No, sir. I think 2 and 4 only.
What about you, Laila? Yes, tell me fast.
1 and 3, sir.
1 and 3 and 1, 2 and 4. Is it right? What is the answer? In respect of test, tracing additions, non-current asset to the cash book and invoice, is it from the beginning till the end, checking the date is correct, is an existence. Check providing evidence that the asset was held by Lancaster from that date. Confirming the amount at which, this is another sentence, okay, another assertion, okay, it is a confirmation. Confirmation, the amount which asset is recorded in the cash book and invoice is related to what? It related to valuation. Test 2, is it right? Test 2, analytical procedure. It therefore provides evidence in respect of all assertions listed with the exception of classification. Why? As the comparison is being performed based on total, this state would not provide evidence regarding classification. Again, there are test 1 and test 2. Okay, there are two things are there. Remember, revise this one. Okay, there is a test 1 is there and there is a test 2 is there. Okay, test 1 is there and test 2 is there. What test 1 says? Test 1 says that tracing additions of non-current asset register back to the cash book and invoice, checking the date is correct, is an existence. Is an existence. Check providing evidence that the asset was held by Lancaster Company from that date, confirming that the amount at which the asset is recorded to the cash book and invoice is a valuation test. Test 1 talks about existence and valuation. Is it? Text 1 talks about existence and valuation. Existence and valuation. Fine. Existence and valuation. Test 1 talks about existence and valuation. If it is existence and valuation, 3 and 4 is right. Is that 3 and 4 is right? 3 talks about existence, 4 talks about valuation. What test 2 is a? Test 2 is an analytical procedure. It therefore provides evidence in respect of all the assertions listed with the exception of classification. Test 2 talks about analytical procedures which exclude what? Classification. As per the comparison of being performed based on the total, that this test would not provide evidence relating to classification. Means test 2 will not give classification. Test 2 talks about analytical procedure, what happened last year and what happened this year. How much we have purchased, what is the purchases of the last year and the purchase of this year. Is it? See, write down some way. Test 1 talks about existence, valuation. Test 2 talks about analytical procedures. Is it? In terms of what? In terms of with the exception of classification. It excludes classification. Is it? It excludes classification. The correct answer is what? Completeness, existence, and accuracy and allocation. Read once again, please. Test 1 and test 2. Okay, remember this. Test 1 talks about existence and valuation. Test 2 talks about excluding classification, everything will be there. Is it clear?
Yes, sir, clear.
Okay, little bit. See, you need revision. Okay, we need revision. On that only it is going to happen. Immediately I will send you these questions to you. Okay. Next, is it okay, Laila? Can I proceed?
Yes, sir.
Next. You are now considering substantive procedures for depreciation, okay, for depreciation across all categories of non-current assets held by the Lancaster, which two of the following are substantive audit procedures for testing depreciation. Both of you tell one option. Okay, both of you tell one option.
Can you go back a little sir to the scenario? Okay, sir. I will choose the second option.
Perform a proof in total for the depreciation charge of 2 million included and investigate. Okay. Yes, Laila. Next.
I will go, sir, with the same.
Another option you have to tell, 2.
Last one also, sir.
Is it clear? Just read the things.
Then, sir.
Is it okay, Gaita?
Yes, sir.
Take pen and paper. Pen, paper, calculator. It is there with you, yes or no?
Yes, I have, sir.
Okay? Yes, Laila. Take, if it is not there, next time you keep pen, paper, calculator every class, okay? Whenever we need. What they are asking us, recalculate the expected loss on disposal of property A, giving your answer to 1 decimal place. Is it? To 1 decimal place. Fine. Now, property A. What is there in property A? Check. Property A. Is that right? Property A was sold for sales 40% of original cost. Is that 40% of the original cost? What is the original cost of property A? The draft is 2 million with 1.7. The property initially cost how much? 6 million. take into consideration 6 million into 40%, it comes to how much?
Again, sir, please.
Huh?
Can you repeat again, please?
Write down disposal proceeds. Disposal proceeds is equal to initial cost times 40%. Initial cost times 40% is equal to 6 million times 40%. 6 million times 40%. It comes to how much?
Two 24,000.
2.4 million. 6 million.
Yeah.
2.4 million. Okay. Next, carrying amount. Carrying amount. Is it right?
Sir, this question come in section B. We have to calculate,
Yes.
so we have to take calculator.
You can take calculator, or it is there in the computer based examination. You have the drop down calculator will also be there. Is that now? Okay. Now, how many years has been over? What is the depreciation? Depreciation is how much? 5%. Is it right? What is the rate of depreciation? 5%. What is the value of the asset? 6 million. How many years are over? How many years are completed? How many years are completed? When they have purchased, seven years.
7 years.
Is that 7 years? Okay. Now you write down depreciation amount is equal to depreciation amount. Step 2. Depreciation amount is equal to cost times 5%, 5 by 100 times 7 years. Depreciation amount is equal to cost 6 million times 5% times 7 years. How much you will get? 6 million, 5%, 7 years.
2.1 million, sir.
This is the depreciation amount. Okay, this is the depreciation amount. Now, this is the step 2. Step 3 is what? Carrying amount. Write down. Carrying amount. Carrying amount is initial amount minus depreciation. Initial amount minus accumulated depreciation, 7 years. Initial amount minus accumulated depreciation, 7 years. Initial amount is how much? Initial cost is how much?
2.4 million.
6 million. 6 million. Initial cost is how much? 6 million. Depreciation is how much?
That we calculated now?
Yeah, 2.1 million.
2.1, yeah.
Okay. Now 6 million minus 2.1, how much? 6 million
3.9
minus
million, sir.
2.1.
3.9 million.
3.9 million. Okay, 3.9. This is the carrying amount. Okay. Now, profit or loss. What they are asking us? They are asking us what? Nothing. No. Okay. Profit or loss. Is right? They are asking where? They are asking what is the expected loss. Okay. Now, carrying amount is equal to how much? Carrying amount is how much? 3.9 million. It is there. Carrying amount is how much? Initial cost is 6 million. Depreciation is 2.1. 6 minus 2.1, it comes to how much? 3.9 million.
3.9.
Okay, 3.9. How much they have sold it? We have calculated the first step.
2.4 million, sir.
Yeah, 2.4 million. Less disposable proceeds. Less disposable proceeds. How much is there? 2.4. The value is 3.9. We have sold it for 2.4. How much is the profit or loss? It is profit or loss?
Loss, sir.
Yeah, and how much is the loss?
1 minute. $1.5 million.
1.5. Send me the send me screenshot what you are written, both of you. Is right? Send me the screenshot what you have written, both of you. I am telling you this. Okay, 1.5. See the things. Disposable debt. Depreciation is how much? 6 point. Compare with your answer. 6 million. Is it right? 6 million into 5% into 7 years. 2.1. Carrying amount is how much? Initial cost minus accumulated depreciation. 3.9. Disposable proceeds is how much? Disposable proceeds are 6 million into 40%. Is it right? Loss on disposal how much? 3.9 minus 2.4, 1.5 million. Any doubt is there? Ask me.
For me, sir, it's just clear.
Okay. Is it okay, Laila?
Yes, sir.
Next. Last one. In respect of revaluation, the which two of the following statements, see here you have to be little bit careful, okay? Regarded reliance on the external expert is true. What is the conditions of external expert when you are taking the services of the expert? Okay, when you are taking the services of the expert, this is very standard answer. Okay, easy way of doing. As per, if we are hiring expert, is it right? We have hiring expert. What we have to make sure in the line of with ISA 16, using the work of audit expert, reliance can only be placed on an expert appointed by your company. Is it? Your company. Fine. Okay, keep that. Obtaining the valuation report would constitute sufficient and appropriate evidence over the carrying amount of the buildings. Fine. A reference to the work of the external experts should not be included in the auditor's report. In respect of the revaluation, which two of the following statements regarding reliance on the external expert are true? Reference to the work of the external auditors should not be included. The objectivity of the valuer must be assessed before placing reliance on the valuation report. Which are true? Tell me. Your company is an audit company. Okay? Your company is an audit
Sir, the
company.
first and the second.
The first and the
And the second one.
what about you, Laila? Second one is obtaining the valuation report. Is it? Just you are getting one report, that is not a sufficient and appropriate evidence. Okay? Just getting a report is not going to support the evidence. Okay? Anybody can give report. Expert can write report without doing valuation also. Getting a report is not, it is not a we cannot rely on that. Okay? Not rely on that. Getting a report everybody will get. Okay? Second one is eliminated. Between third and fourth.
Sir, if it is
The fourth
significant,
one.
we can mention it in the report.
Pardon?
The export is significant, and we can mention it in the audit report.
We can include or we cannot include?
We can include if it is significant.
Here we are not talking about significance now. Reference to the work of the external expert should not be included.
So third one, sir, we can determine it. It's not in the choice. I will go for.
Why you go for fourth? Tell me. I will agree with you. Tell me. What is the reason of going for fourth one? The most important thing is objectivity. Okay, what is the objectivity?
Because
Tell me.
because sir, one of audit risk that valuation industry. So sometimes that audit should be expert median.
Yes. Okay, audit needs expert advice. But the purpose, objectivity, why we are doing this, what the valuer must be assessed, is it right, before placing reliance on the report. Means we should know auditor should be experienced, auditor should be qualified, auditor should be neutral, the auditor should be have the why they are doing the audit, the objectivity, the purpose is also important. Is that means the moment we are relying on the expert advice, means we should, the first point is, yeah, we are doing with all proper justification and requirement or not. That is the first point we should take into consideration. Okay, that is one of the point which we can also rely. The answer is in line with ISA 370, the reliance can only be placed on the expert appointed by the auditor. Here he is what auditor has to appoint, client should not be appointed. The auditor can appoint an expert with the client permission, that by default. Okay, and we just to obtain the report, that is not a reliance. Okay, the reference to the work of the external should not be included. It has to be included. How we cannot include is that it has to be included. And the objective of the valuer must be assessed. Is that who qualification, experience, expertise, purpose what we are doing, then it make sense. Okay, then it will make sense. What is the answer? It's not going, color is not going. Okay, I will leave like that. Just this question test candidates' understanding of the issues for the auditor when placing reliance on the work of the expert. There are two types of experts which the auditor may rely on during the course of audit: a management expert or an auditor's expert. In this instance, the expert has been used by Lancaster to assess the valuation of the building, which will appear in the financial statements. Fine. The expert is therefore a management expert in accordance with ISA 500 audit. If information is to be used for audit evidence that has been prepared using the work of management expert, the auditors must evaluate the objectivity. There are two types of expert. One is auditor's expert, one is management expert. If you are taking ISA 500 audit evidence, it is the management expert. Okay, the competence and capability, this is important, the competence and capabilities should also be evaluated. The auditor takes sole responsibility. You cannot say that expert has done, that is final. No, the final responsibility is with the auditor. If the auditor is to rely on the work of the expert, the evidence would have been evaluated with the conclusion that it provides appropriate evidence. Okay? No reference, therefore, to the expert should be made. We cannot say that, yes, expert has done. No, it is not the expert. On behalf of the expert, auditor has done. The sole responsibility is with the auditor. Nowhere we are mentioning the expert. Is it right? In the audit report. Okay, in the audit report we will not mention the thing. Option 1 is incorrect in accordance with 500. This may be circumstances when it is appropriate for auditors to place on the management expert. Now one is appointed by the management, one is appointed by the expert. Simply obtaining the evaluation report would not constitute appropriate evidence. Just you have to get the evaluation report, it doesn't make any sense. In accordance with ISA 500, an auditors would be required to evaluate. The auditor has to do again whether the information is sufficient, reliable for the purpose of audit. It is auditor's responsibility. This would include obtaining evidence, accuracy, completeness, information, evaluating whether it is sufficiently precise and details. Okay, all the things we have to take into consideration before we are going to say that the auditor will say that it is appropriate or it is not appropriate. Fine. What is the first one is the objectivity. Is that the objectivity of the valuer must be assessed, and the second one is it has to be in line with 620. Remember, there is two things are there. 650 is audit evidence. Okay, 650 is audit. Sorry, 500 is audit evidence, and 650 is using the work of a auditor's expert. Okay, using the work of a auditor's expert. If we are using the work of the auditor's expert, it is the responsibility of the auditor to make sure that it is sufficient and appropriate. And expert opinion should not be included. The auditor will give opinion based on the expert report. Okay, based on the expert report, it will give the opinion. Is it clear to you?